This is Alan Bush with the Daily Financial Forecast for Tuesday, June 7th. In the stock index futures, we did see some new highs for the move yesterday and also in the overnight trade and now also this morning. So stock index futures putting in a very good performance, even though some of the economic numbers as of late have not been that good. Particularly the non-farm payroll report, as you recall, last week coming in only up 38,000. And yet, we do see good gains in all of the indices. In fact, global stock index futures are putting in rather good performance recently. So the key is the Fed, and it appears that the Federal Reserve is likely to delay raising interest rates. So that appears to be what traders are focusing on. We would agree that that is the key and that stock index futures will continue to advance today, and they will most likely continue to advance for the balance of this year. So continue to trade stock indices from the long side. Now moving over to the currencies, seeing the euro currency just a little bit lower, even though we did have two economic reports in the Eurozone coming in better than expected. Higher prices for the British pound after a recent poll, in fact yesterday's poll, showing that the Stay campaign now is leading slightly versus the Leave faction. In the previous session, though, we did see just the opposite, the polls on Monday showing the opposite situation. So the pound extremely volatile based on what we are getting from the polls. Don't forget that referendum is scheduled for June 23rd. Also, the Australian dollar trading higher. This after the Reserve Bank of Australia at their policy meeting holding credit policies unchanged, indicating in their statement that they are not likely to lower rates anytime soon. So that very supportive to the Australian dollar. And credit markets trading higher in the last several days or so. This linked to ideas that the Fed will not be raising rates anytime soon. In fact, the financial futures markets now are predicting only a 4% probability that the Fed will raise at the June 15th meeting and only a 66% chance that the Fed will raise at the December meeting. Now moving over to the precious metals, any breaks there should be viewed as a buying opportunity. Some support coming in with the Fed likely to be slow to raise rates. Also, we are seeing global inflation starting to creep up. So that, I believe, is the recipe for higher prices for the precious metals. Any breaks in gold and silver should be used as a buying opportunity. And this is just the beginning of a multi-year bull market advance for both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.